release of StreetEasy's third quarter market report, we've gained a lot of insight about the market's performance over the past 3 months. Today, we're here to talk with industry-leading mortgage broker Melissa Cohn about what these findings mean for local buyers and what they mean for the future of the market. As founder of the Manhattan Mortgage Company, which closed over $1 billion in home loans this year, Melissa has great experience working on the local and national level, and over the years has become an authority on home financing and real estate trends. We're thrilled to have her share her insight with us today. So thank you, Melissa, for speaking with us today. We're excited to hear your insight on our third quarter market report. So I wanted to ask you, we've seen historically low mortgage rates for the past few months. We've seen a busy spring selling season and shrinking inventory. Year over year, inventory has been declining across all major markets. So, you know, with decreased supply, low mortgage rates, you think that closing prices would actually be up. But in our market report, we're seeing that prices are flat. What do you think, what do you think might account for this?
Well, I think, for example, in the co-op market, that it's harder to actually get co-op approval. The co-op boards are more demanding. The banks are a little bit more demanding when it comes to financing, so that prices are flat because it's harder to actually get something sold in a co-op than it is in a condo. In the condo marketplace, we have a lot of foreign investors who come in and pay cash and don't have any of the obstacles of the limitations that the co-ops have. Co-ops, for example, will limit how much financing you can take, will demand that you have a certain amount of money post-closing, will limit you to your occupancy or how you take title.
Mm-hmm.
The condo market, which is a much more open market, you can finance as much as you want, you can buy it as a primary residence, second home, investment property. So you have a lot more flexibility, so I think there's been a lot more interest in the condo market over the course of the past year. We've also seen a strong influx of foreign investors in the marketplace, and foreign investors generally buy condominiums, and with the flight of money from some countries that are in more economic disarray than we are, people are coming here and putting their money into real estate in New York or in the United States and feeling that it's a safe place to park their money.
Okay, so let me ask you about inventory. The New York market is so seasonal, and traditionally we always expect to see a bump post-Labor Day. This year we didn't see that bump, and in fact, we've just been seeing month-to-month, quarter-to-quarter, this declining inventory. And so I guess what I want to ask you is, what do you think is contributing to our shrinking inventory?
Well, I think there's several reasons. One is, first of all, there's very little new condominium construction, where much of the increase in inventory over the course of the past few years, or before, let's say, 2008, has been all of this new condo construction, which has not really happened over the course of the past few years. So it's been basically an absorption of the condominiums that had been built and not yet been sold. I also think that people are underwater or don't have enough equity in their homes in order to be able to sell without having to write a check, and many people don't want to write a check in today's marketplace, so they, I think, continue to sit it out to wait and see what's going to happen and hope that prices will continue to go up, although they've gone up slowly, but they are coming back to the 2008 levels, especially according to your study. And lastly, I think people are concerned about the economy. What's going to happen with the election. So I think there's a lot of wait and see that we're going to have over the course of the next month with the election, so close, and then hopefully we'll see things open up again.
Stay tuned as we continue our discussion with Melissa Cohn in our upcoming video about lending requirements.